Hi, this is Gaston Reboredo, President of Florida Property Management Services in Fort Lauderdale, Florida. I'm here today with an insurance expert, Jorge Acosta from USI Insurance. And we're going to be talking with George about property insurance for real estate investors. Many aspects of that. So, George, tell me, what types of property insurance are important for a real estate investor in South Florida?
There's actually quite a few number of insurance coverages that are a necessity for insurance investors and landlords. Obviously, number one being property insurance. Property insurance covering you for fire, for theft. Inside that property insurance, you might have wind coverage or tornado coverages that it's needed for all properties. Many times they don't buy these kind of coverages because they're all paid off and the banks don't require it, but I firmly believe that it's a necessity to have those two coverages. The second coverage is liability insurance. It's very, very important to look at your policy and make sure you have liability coverages. Tenants, they tend to have people coming in and out. Everybody does. They invite some family members. They have a party. Somebody slips and falls. They might sue. You need to be protected with liability insurance, so the policy covers you for those type of damages. The third, and I think one of the most important policies to keep in mind, is the loss of use, loss of income insurance. And what this does is, whenever a storm hits or whenever there's a fire, the tenant is not going to be able to use that property. He's going to have to live someplace else. What does that mean to the ownership? They're not going to get that income coming in. With loss of income insurance, that time period, whether it's 3 months or 6 months that it takes to fix that house or that property, you're going to still be getting that income coming in, so the ownership will not see any decreases in their income. So those three are very, very important. Let's not forget about flood. Flood is extremely important, and it's not that expensive to have, especially in a flood area. Many people they forget that floods occur 30% of the time in non-flood areas. So it's very important to make sure that's part of your risk management or risk practices to have flood insurance in your program. So those four are the top.
Thank you so much. And also, how do we choose the right deductible or co-insurance?
Okay, that's strictly an economic question for the ownership. Typically, it's simple economics. The higher the deductible, the lower the cost is going to be. I don't agree with that, because it's very, very important to get a good deductible, especially for wind. You don't want a 10% deductible, you want a 3% deductible, or maybe a 2% deductible for wind. And the all other perils deductible, some ownerships will want a $50,000 deductible. You're basically self-insuring at that time. You don't really need the insurance coverage unless it's a total loss. Typically, I recommend a $2,500 or $5,000 deductible. But again, it's your risk tolerance, what you think it's the best for your properties. Again, it's economics. The higher the deductible, the lower the cost. The lower the deductible, the higher the cost.
And then, how do we choose, we as property managers or real estate investors, as investors, how do they choose the right insurance company?
There are many, many companies out there. There's hundreds and thousands, and there are many of them offering you very low prices. The question you got to ask is, are they going to pay my claim at the time of loss? And that's where the question comes in. How do you choose the right insurance company? Typically, I won't sell any company, I won't recommend any company that's not A-rated or above by AM Best. That means they have to have financially, they have to be very, very sound. They have to have the correct number, the right number of reserves in order to pay claims, and they have to have a strategy instead of a catastrophe. to have those reserves implemented at the time of those catastrophic losses.
And George, as an expert in property insurance, what other suggestions you can give real estate investors and property managers in South Florida to really have a comprehensive risk management plan?
Yeah, okay, that's a great question, because those three coverages or four coverages that we talked about earlier, most people, most ownerships know that they have to have that. But to have a comprehensive risk management, to make sure that all the properties are covered correctly, you have to look at two other types of coverages that are not spoken about. One of them being cyber liability. Ownership has hundreds, maybe thousands of houses or properties that they own. That means they're collecting data from not only the people who live there, but the people that apply and get declined. They're not accepted to live there. So you have a lot of information in your database. A data breach can be very, very costly to you. Somebody steals the identity of a tenant, they're going to go after you to help them. If they steal from the bank with a fake identity, they're going to go after you. So you need to have protection with cyber liability, not only to protect you, but to protect the tenant as well. What this does is they'll monitor the individual that the data that's been stolen for over a year, which costs about anywhere from $10 to $20. So imagine if all your unit owners or all your tenants' information had a data breach. That's thousands and thousands of people at $10 or $20 per month for the whole year of monitoring. That could be costly. Well, cyber liability will protect you, and the actual policy will bear the cost. So that's very important. And I would say the second most important one would be an environmental policy. Environmental is something that's overlooked as well. Most property policies don't cover it. It has to be a separate policy together. An environmental policy, what it does, it protects you against anything that the tenant will do. For example, they're changing the oil of a vehicle. They throw away that oil in a dumpster. The dumpster company comes, picks it up, and spills that oil. It goes into the water supply. That's a big, big issue. Not only for your house, but also if it contaminates the neighbor's house, they're going to be going after you. They're going to be going after liability charges, claims, and they're going to be environmental claims. If you don't have this kind of environmental policy in place, it's not covered, and it comes out of your pocket.
Thank you very much, and thank you very much, George, for all of this important information for real estate investors in South Florida.
Yes, it's my pleasure. Thank you.
If you have any questions about property insurance, please contact us, and we'll put you in contact with Jorge Acosta, an expert in property insurance in South Florida.
Thank you.
Thanks for watching.